a terrible week for commodities.
Kate, it's nice to see a bit of green on screen for a Monday, and that's because it's the first Monday where we have seen gains in the last 5 weeks. So we have gotten quite used to a weaker start for the Australian share market, yet despite those lower commodity prices, we did manage a gain. Just having a look at that commodity space, and that it was still a drag on the market, the energy and the materials sector ending in the red today. In fact, if we have a look at some of the big movers, BHP was down 2.1%, South32 down a massive 5.1%, although we did see some of those stocks bucking the trend, with Fortescue up by 4.3%. But the consumer staples was looking very good today. Woolworths finally having a good session, up by 3.8%. That was on the back of speculation that TPG and Blackstone could be interested in buying Big W. And also we heard that Roger Corbett, who of course was a very successful ex-CEO of Woolworths, had come onto the company as an advisor. So great to see Woolworths doing well. The other retail stock doing well was Myer. Myer managing a gain, brokers upgrading the stock after a very successful first quarter, and hoping that leads on to a successful, very important Christmas trading period as well. Some standouts on the market today. It looks like the baby boom on the Australian market continuing. A2 Milk up a massive 12% on the market today. We also saw Bellamy's gaining 5.5%. And Baby Bunting, which only listed back in October, the stock was up 4.1%, and since listing is up a massive 65%. So it was a good Monday for the Australian share market outside of the energy and the materials space, and altogether consumer staples really a star performer there, and some of those baby stocks also continuing to do well.
Go to you now on a different stock. Well, there are a couple of other stocks in focus in the M&A space today, Arvida and Equifax. What's the latest on these?
Look, it looks like this one is a done deal. We heard that Vida's board has backed that particular bid, and if we have a look at Vida, it hasn't been on the Australian market for too long, but what it looks at is analytics and basically credit ratings for people who want to borrow money in Australia and New Zealand. Equifax is a much bigger company. It's based out of the US, but it does operate globally, and I guess if Equifax wanted to start up a company like that in Australia, it would be quite difficult to get that information from scratch. So the fact that they've taken over Vida, or looks like this takeover is pretty much a done deal, would be a positive for Equifax. It looks like we lose another Australian company to an international predator, which isn't surprising given that we have seen the Aussie dollar falling substantially. We've seen Vida shares closing at $2.75 today, and the bid of course is at $2.82.5. So a slight difference in terms of the price, just because the time it's going to take to make this takeover successful, and I'm guessing that is by around about February that we'll see the full takeover being done. But otherwise, I think the market's fully pricing that this is a done deal.
Health front, Julia, it sounds like Qantas is going to encourage its frequent flyers to be healthier in a way.
I guess this is all about cross-selling services, and if we have a look at Qantas frequent flyers, there's 11 million Qantas frequent flyers, and if we have a look at NIB Holdings, which is where this deal is being done, this is a regulated industry. The prices rise according to what the government allows the price to rise, and sometimes it can be very difficult to find growth in the health industry outside of cutting costs. So the fact that we are seeing NIB targeting a larger market and that frequent flyer market, I think a real positive for NIB Holdings, because it is becoming harder and harder to see growth. We have a look at the Australian population. Around about 50% of the Australian population has health insurance. So there's still a number of Australians that don't have health insurance. This particular deal is with NIB Holdings and Qantas, and it will be called Qantas Assure. And what will happen is that Qantas frequent flyers will receive rewards for exercising. So the more steps they do, the more frequent flyer points that they will receive. So it does like a good partnership has been done here. Not a huge reaction in either of the share prices today, and I guess it's still yet to be seen whether they are going to meet their targets, and they are targeting 2 to 3% of the market in terms of revenue over the next 5 years. Now, NIB Holdings, interestingly, is one of the few companies that we've seen in 2015 with a profit upgrade. After its November AGM, they did come out to say that they did expect to now see profit between $90 to $100 million. And if we continue to see initiatives like this, I think we'll see more growth coming through from NIB.
And Mike, this one?
I guess it's becoming harder to believe management, and that's because if management are to believe, then you need to see a big surge in terms of the second half, both in terms of revenue and profitability. So management has really stuck to its guns here in terms of target, but the fact that we have seen weakness in the first quarter, it means most of the work has to be done in the second half, does increase the probability that we would see a downgrade to expectations here, and certainly I guess the brokers are starting to price that probability in. It's also a stock that is very highly shorted internationally because of that Quindel acquisitions and the problems over there in the UK. So I guess this is a question of whether you trust what management is saying and whether we do see a speed up of both revenue and profit in the second half to meet what management has been targeting.
Michael, focus, and Julia, what about you?
Well, one of my favourite holidays over in the US is the Thanksgiving holiday, which is this week. So I think it's going to be a quiet week for markets, seeing that the US does have its Thanksgiving holiday, but that's a very important time for consumers over in the US. We have Black Friday sales, so that's usually a good indication of consumer confidence over in the US. So I'll be watching those sales very carefully and those numbers coming out of those sales, but altogether expecting it to be a pretty quiet week, given that one of the biggest markets in the world will be closed for that Thanksgiving break.
Well, indeed.